which brings total debt to $173,638.
I used to use credit cards religiously and poorly.
This causes you to spend money you don't have. It's not going to be an easy road, frankly. What is happening here with the $17,000 in the collections?
Nothing.
What is that from?
Ashley Stanley, age is 44, and calling in from Manhattan, New York City.
And what do you do for a living, Ashley?
What have I done for a living? Let's go there. I was a real estate broker in Texas. But what I do now is I'm in administration, just like support role in finance.
And how much you make a year?
Ooh, last year, let's go with 105.
And are you living in the heart of Manhattan, or where are you living in New York?
Yes, Upper West Manhattan.
Not a cheap place. How long you been in the admin kind of world now?
As long as I've been in New York, so that's about 2.5 years.
And prior to that, how long were you doing? Was it only being a real estate broker in Texas prior to that, or were there other careers as well?
I lived in Denver for a little over a year, like right when the pandemic hit. And I was a property manager for an industrial warehouse space. Yeah, I did that for a year. And then, but prior to that, I was in Texas, in Dallas, as a real estate broker, running my own company, doing rentals, basically, not like residential real estate, but helping people, just rent places.
And how long did you do that in Dallas for?
Over 10 years.
What would you kind of rate your financial situation on a scale of 1 to 10?
Well, there's so many factors, Bailey. I don't know. A 7?
Rate yourself a 7. Okay.
And a half?
7.5. So you're putting yourself on the good side then.
I feel like I'm okay. I mean, I'm not. I feel like I'm okay. Yes, I'm not great, but there's room. There's a lot of room for improvement.
Assets. What assets do we have?
Oh, nothing. I mean, I have cash. Is that enough? I mean, I guess an asset would be a life insurance policy, right?
It depends on the policy. If it's a whole life insurance policy, if there's a cash value, then technically that's an asset, because you could withdraw that. If it's term life insurance, no. I'm not a whole big fan of whole life insurance policies, but that's a whole different topic we'll get into later. Yeah, I mean, assets are money in your bank account, savings accounts, investments, retirement accounts. If you own a house, your car is technically an asset, but you live in New York City, so I don't think you have a car.
I don't.
So those are kind of what assets are.
Okay, let's go with cash, my friend. 25?
25,000 in cash right now?
Yeah.
Is that just sitting in a high yield savings account or in a checking account right now?
A savings, yeah.
No retirement accounts or anything right now?
No, I'm going to say no. I had something when I had this other job, but I cashed it out. It was very little money, a 401k or something like that, but no other retirement.
How much was in it? Do you remember when you cashed it out?
Yeah, it was like $2,500.
Never a fan of pulling money out of retirement accounts early. You got $25,000 in cash, no retirement accounts, so total assets is $25,000. So let's talk about debts then. What different debts do we have right now?
Bailey, the only debt I have is school loans, and it's massive.
How much do we have?
140.
Has it changed? Because you said on the sheet you said 156.
Oh, okay, then it's 156.
Student loans, 156,000. Okay, and is that all the debt? Because we also have on what you said over. You said 776 on a credit card and 17,000 on collections.
Oh, okay. Then I gave you my Credit Karma. I guess that's what it says on Credit Karma.
That's what you put into the budget you sent over.
And there we go.
Not aware that those are happening, or what's the status of those then?
Nothing's changed. The credit card account. Oh, I'm sorry, has been paid off, so that's no longer.
The credit card debt has?
Yeah, the 700, that's gone.
That's good to hear. At least that 1,000 is gone. But that leaves us with $156,000 of student loans and then $17,175 in collections, which brings total debt to $173,638, which is not a small number at all, which puts your net worth at negative $148,638. So off the bat, frankly, way too generous with your current finance situation. Give yourself a 7.5. Looking at these numbers, I'm going to put us probably at a
3.
3 would be generous. 2.
What?
A 2, and the only reason I'm putting you at a 2 is because you got $25,000 in a savings account right now.
Okay.
Not something I want to see because, I mean, if you want to retire when you're 65 or 67 and a half, I mean, you got 20 years to figure this out, and I don't want you to be swallowed by student loan debt for the rest of your life. $156,000 worth of student loans. What was the total, I guess, amount taken out for the student loans?
I mean, it's grown only because I have a master's degree, and so also I did student loans for the master's degree as well.
How much did you have in loans for undergrad and then for your master's degree separate?
Bailey, I don't know. I really don't. I really don't. I mean, my undergrad was a Christian college, private, so more expensive. And my graduate degree was also private school.
Okay. So you don't know the breakdown or estimate between either of those? And what did you get your master's in?
It's a Master of Arts in Dispute Resolution, so like mediation, which a lot of people think you have to be an attorney or a lawyer to do, but you don't.
And when did you get your master's?
I completed it in 18.
Okay, so the student loan, you've had student loans on undergrad, graduated in early 2000, I'm assuming, from undergrad, and then 14 years later or so went and got your master's.
Yep.
And have you been making student loan payments at all the last few years, or when they went on pause, you stopped?
Yeah, when I was in school, I didn't have to make payments, so didn't. And then haven't resumed. I mean, with the whole pandemic, you haven't had to really. They've like paused all those and paused the interest, accruing.
Did you know that student loan repayments were resumed in October?
Yeah, but my account doesn't say that I owe anything right now. Like I've received statements and they say literally $0.
They resumed back in October. Interest started accruing in September, resumed in October payments. And do you know what your interest rate is on those student loans?
Bailey, no.
Ashley, come on. We got to know these numbers.
I don't. I mean, I would just be guessing if I gave you a number. I really don't know.
Most student loans that I've seen are anywhere around like 4 to 6. It's over $150,000 at a 6% interest rate. I mean, I can only imagine what your monthly payment would be. I'm sure now, I know there's different plans, income-based repayment. Payment might not be as high, but then it also just prolongs how long you have to pay these down, which is not fun either, because I don't want you to be 70 or 80 years old and still have $100,000 worth of student loans. That frankly doesn't sound very fun to me. That's one of the things we'll talk about is like, what can you do over the next, it's not going to be the next 2 years. It's not going to be the next 3 years. Maybe it's the next 5 or 6 years. How can you get out of these student loans, pay them down? Collections. What is happening here with the $17,000 in the collection? What is that from?
A couple credit cards from long ago. These are debts from 4 or 5 years ago. And then one of them I know is like an apartment debt. Not that I owed money when I left, but the damage on the apartment added up to, like, they had to replace flooring and do all these different maintenance things that added up to a certain amount. And that was charged to me, which I don't agree with, but it still hit my my credit.
Okay. And that's been going on for 4 or 5 years, just been sitting in collections, or?
Yeah.
And are you just getting calls constantly about that?
No, the calls have stopped.
Interesting.
Yeah, they started, but then they've stopped because it's been so long. They've I don't know if they can like continue to call on them, can they?
You owe the money. You signed on the dotted line that you would pay this money, so they can definitely continue to come after you. And I don't know why they would have stopped, but I mean, there's also a court process with that will definitely take you through, and definitely has more things they have to jump through on their end, but I mean, it can definitely get a legal document in a court to decide in their favor to start garnishing your wages as well. I mean, that's what can happen with collections is you signed on the dotted line to, hey, I'm going to pay this money back whenever I spend, or they can still kind of come after you for those types of things, especially on the credit cards. They definitely can garnish wages under certain circumstances. So, but I wouldn't ever sit here and say, hey, those are gone forever if those phone calls stopped ringing. Because that's very unlikely that people will say, hey, $17,000, Ashley, sorry, we don't want that money back. So one thing that is possible to do with collections, it's not 100% guaranteed, but there are instances that people can negotiate down debt collectors and talk them down. And it might be for 50 cents on the dollar, it might be for 60 cents, it might be for 70, it might be for 20. You never really know unless you try. But that is something I would personally suggest doing is if those who do reach back out, whatever it is, if you get mail, what can you do to call them and say, hey, explain your financial situation. Hey, I have $175,000 worth of debt. I can't make these payments. I can't really pay you the full amount, but would you take $7,000? Would you take $10,000? And figure out what that minimum is. You'd have to get it in writing. Don't give them your bank account information because then they can withdraw more. There's some certain things around that you have to be very careful about. But there's certain things you can figure out with that is, okay, can you get that down from $17,000 to $10,000 or $9,000 and just walk away from it once you pay that and are done and wipe it off? That's not the worst thing in the world to do. With your $25,000 in your bank account, that is something I would seriously consider. Is that's going to stay on your credit score forever. That is going to stay with you until they get that money out of you. I can promise you over the next 10 to 15 years, someone will get that money out of you, whether you like it or not.
Yeah, totally. As we were talking about this, what comes to mind though, and I'm sure you've heard of this company, Lexington Law.
Not familiar with them, no.
Okay. They're just like a credit
repair.
Yeah, they assist you with all those things you just said. And kind of obviously you pay them a fee to do that, but I've used them in the past and it's worked. So it's worth investigating kind of what they could do again.
Yeah, that looks like they do credit repair. I don't think they do debt settlement. I've never used them. I don't know anything about them. They have horrible reviews on the internet, but people also are ruthless on the internet. But yeah, I mean, there are debt settlement companies. There are stuff out there, but also you can call and handle that yourself and not pay someone a fat fee to do it because people will charge fat fees for stuff. And for improving your credit, I mean, the best way to improve your credit is make your payments on time, don't carry a balance, have low utilization if you have any credit cards or any debt at all, and then just do that for long periods of time. So, yeah, I mean, there's a lot of pay money to get your credit repaired instantly, but frankly, in your situation right now, credit score only matters when you're getting debt. And in your situation, we need to be avoiding debt like the plague because you got $175,000 worth of it already. Okay, so that's it on the asset side and stuff. Sounds like there were some bad financial habits going if there's credit card debt, collections. How much of that was credit card debt, would you say, out of that 17?
Probably 12 or 13.
And how long was that going on for?
I want to say this was back in like pre-pandemic, 18-ish, is when all that kind of hit my credit report. So it's been on there since then for about 5 or 6 years.
And so what's changed since then? Because when you did email me over, you did have 700 and some change on credit card debt, but now it's at zero. Have you kind of gone up and down with credit card debt in the last 5 years, or has anything changed since all that went to collections?
Oh, yeah. I mean, I used to use credit cards religiously and poorly, and I only have one now. That's what's changed. And during that time, I wasn't making a whole lot of money, and so I couldn't really even make payment on what I owed.
And so are you using that one credit card frequently now? Are you paying off in full now, or what's kind of the status of that?
I'm keeping it below 30% typically. I don't know it's paid off now, but I usually keep it around like 25% of the available balance.
So you're using it, paying it off, which is that no, I don't think I have the credit card statement. It doesn't look like.
No, I just sent in bank statement, like all my 5 accounts.
The credit card though, it's paid off in full right now. There's no balance on it?
No.
Okay, good. Well, obviously you've seen this now because you've been playing the credit card game and have 13,000 of that in collections basically now. But the issue with credit cards is they allow you to spend money that you don't have. Frankly, right now with your current situation, I have 5 different accounts that looks like you're spending money kind of through every single month, which if you add a 6th one with a credit card, it just makes things very complicated for you to understand where's your money going, how much are you spending, because I'm looking at this, I'm trying to figure it out. I'm sure you going between 6 different accounts is difficult. I like consolidating down. It's like, okay, have one card that you spend all your money on. And if you want to have multiple different bank accounts, I don't know why, for whatever reason, with 5 different banks, then you can do that. But I would only be swiping money in and out of one account because it just makes it easier for you to understand how much you're spending and where stuff is going.
Yeah, you sound like my friend Bailey, who has passed and no longer with us. But when he would talk to me about banking, he's like, why? I don't get it. You have 5 accounts. What is the purpose? You know, you need one card, one account. Like, just why do you make it so complicated? And honestly, I don't know. Other than like, I just don't want to see all my money that I have. I just want to look at it like I don't want to spend, because I feel like I would spend what's in there, you know? So like if I spread it out, I don't see it, and I only spend what I can see, which is not much. It's not solid thinking, Bailey. I'm not saying it's smart. I'm just saying it's what I do.
So I'm not opposed to, and I do this personally, like I have a checking account that all the money flows in and out of, but my emergency fund and anything on excess, I move to a high yield savings account, and I don't view that. So if I log in to see, okay, how much I have in my bank account right now, I don't see that money. It's in a separate account. And frankly, you're saying you don't want to see all the money that you have because you'll go spend it all. Technically speaking, that money's not yours because you owe $175,000 to other people. So yes, that money's in your bank account, but you owe that money to other people currently.
Okay.
Well, let's go through these monthly transactions then. Which account should we? So I guess I'll start with the current account, which you ended the statement with $9,793. Did you transact on this card, or is this all just a savings, basically?
My current account, I do transact on it. It's like a virtual bank. There's no like brick and mortar to this. So, and I don't carry that card on me. The card that I carry on me is my Citibank card, which is the one I use most often.
Yeah, because current, I don't see any transactions on that one, but I see the almost $10,000 at the end of the statement period. So this one, you ended the statement with $17,000 in here.
Okay.
But you started the statement with $562. Where did all that cash come from?
Claim, like a short-term disability claim that I was awarded.
Okay. So I see that, yeah, $17,000 from that. Okay. And you moved it into, I guess, your money market account. We need to go through your monthly budget, monthly expenses. Do you budget at all when it comes to monthly expenses, monthly income and expenses, or do you not look at your transactions at all on a monthly basis?
Bailey, I'm very sorry, but I do not.
That's kind of the first step when it comes to how do you get out of debt, how do you build wealth is, to be able to do that, you have to live below your means. And if you don't know how much money you're spending, how much money's coming in, then it makes it very difficult. So I've moved to a new platform called Copilot. It's, I think, $95 a year, but they have a 2-month free trial right now. But I just switched to it recently, and it's frankly wonderful so far. And the beautiful thing about it is people are like, oh, I don't want to spend $100 on, but you pay $100 for them. But I can promise you, if you don't have a budget and you spend $100 on a budgeting tool and you use it religiously for a year, I can promise you will find more than $100 in expenses to cut out for that given year. Looking at your expenses, so we have what you put on here for gross income was $6,000 a month, and you put net income at $5,000. Is that accurate? But because you also said you were making $100 at the beginning.
So you asked me. I think you asked me what I made last year. What I'm making now is not the same as what I made last year. I'm making less currently.
Okay. So what's your income? Is your gross income $72,000 this year?
Probably, yeah. It will be.
What's the reason for the dip from $100,000 down to $73,000 this year?
Good question. I'm doing not full-time work. Just like currently doing a temp job, which typically is, less hourly rate.
So you're not working. How many hours a week are you working right now?
Don't get me wrong. I'm probably working 40 hours, but they're not paying me as much as I was making at another job. So and I'm doing different jobs probably every 2 to 3 months, a different position. So
jumping right now. So income's gone down a little bit. Okay. So your net income, roughly $5,000 a month. First line item expense, rent, $2,000, which doesn't sound that bad for living in New York City. Are you living by yourself?
My son, he's 9, but yes, living by myself. Yeah.
Okay. So it doesn't frankly sound too bad for in Manhattan. Utilities $125. You got groceries for $500. So it brings your total necessities to $2,600. And then we got subscriptions $19.99, eating out $500 a month, entertainment $500 a month. Is that for your son, or what is $500 for entertainment budget?
I don't know. Just like stuff we do, random stuff we do. It could be like we could go bowling or something. I would just figured we probably spend about $500. And like my son has a VR set that he has, I don't know what they're called, V-Bucks or something like that you buy on this stupid game. And so just, accounting for some of those transactions.
Kids are expensive and they like things, so.
Oh, Jesus.
Health and fitness, $200, personal care, $100, pet, $100, and then travel, $250. So that brings your total fund money to $1,669, which brings your total living expenses to $4,294.99, which if you're sticking to that budget, that means we would have $740 a month left over, which is good. It's in the green if we're sticking to this budget. The question is, are we sticking to this budget? And the other question is, this also doesn't account for any student loan payments, which I would presume at $156,000 would be well over $740 a month. would be my guess.
Well over. Yes. I bet you're right.
So that means we got to figure out how can you go from where you're at now, about $4,300 a month in monthly expenses, be able to pay off these student loans in the next 4 to 5 years would be my goal for you. Like, how can you make a lot of progress on that? And then how can you start saving a lot of money towards retirement and investment accounts so that you can retire one day and you don't have to sit here and depend on Social Security when you're 67 or 70 years old and you want to stop working. With your current finances, I'm glad there's money in the bank, but sounds like, $17,000, that's from a claim that you just got. So it's not going to happen every single month.
No.
And so before that, we had, I guess, about $8,000 across everything, which would put your net worth even closer to $160,000 in the red. So we got to figure out how can we climb out of this hole and how can we do it faster, because I want you to be able to enjoy life. I want you to fix and correct your financial future so that, hey, your son, when he's 20, 30 years old, he doesn't have to sit here and worry about mom either and about her financial situation.
It does. And as you're talking, I'm thinking of this, back to this whole life insurance policy that I had mentioned in the beginning. So I have two, one of myself and one of my son. And the one of my son is a 15-year term.
Why do you have, are they both term life insurance?
No, mine is
Whole life?
Yeah. And then, but his is a 15-year term. I started it when he was 3. So my understanding is that it will kind of come to an end at 18 and he can pull that money out. That's my understanding.
Two things on insurance. If it's a term life insurance policy, you can't pull money out of it. So term life insurance is only like basically a death benefit insurance policy. So if you have a 15-year term life insurance policy, we'll call it $500,000, the only time, like if I had a 15-year term life insurance policy and I died next year, my wife would get a $500,000 check for that policy. But in the 15 years, when that policy is over, there's no value of that life insurance at the time. But the goal and hope of term life insurance is to assist family or dependents that need money to live if they depend on your financial income or stability. So that's why for certain time periods. And I'm a fan of term life insurance because it's a lot cheaper than whole life insurance policies. Yes, there's no cash value of it, but typically term life insurance is like a tenth of the cost of whole life insurance policies. And insurance is not called an investment vehicle. It's called insurance for a reason. So it's supposed to be for extreme situations like death, versus a lot of people, which sounds like you have a whole life insurance policy for yourself. Whole life insurance policies are sold to you as an investment. Yes, they might earn you 3, 4, 5, 6%, whatever interest over time. But what they don't tell you is, hey, these are very commission-based products that the whole life insurance policy is making 90% of your contributions basically in year 1, probably 80% in year 2, and it's all very front-weighted commission-based products. And so they're selling to you as an investment vehicle because guess what? That pads their paycheck in their wallet when you sign up for these. And yes, they have cash value amounts, but like I said, they're usually 10 times more expensive than term life insurance policies. There's a guy, Jeremy Schneider, and I'll send you the post. He did a post on whole life insurance policies versus term life insurance policies. Basically, I think it was over the course of 40 years, the difference, he took the monthly price of a whole life insurance policy and the monthly price of a term life insurance policy. And the difference was, I don't know, a couple $100 a month. And if you took that, got the term life insurance policy and invested that extra couple $100 a month, you would then have $1 million more, $800,000 more than the whole life insurance cash value by investing in the index funds. In your instance, you got a 9-year-old son. I would say you need at least a 15-year term policy so that, okay, if you were to pass away when he's 16 or he's 12 or he's 15, then whoever would become his guardian would have money to send him to college, to pay for his living expenses, his food, his shelter, etc. And that's kind of what the benefits of term life insurance policies are. Does that make sense?
Yes, but it also makes me want to call my insurance guy.
Do you know off the top of your head how much you're paying for your whole life insurance policy right now?
Like $90 maybe?
$90 a month?
Yeah.
Okay. So, I mean, that's not a small amount. I mean, it's $1,000 a year. And also, okay, if you have a whole life insurance policy you've had for 5 or 10 years, however long it is, what is the cash value of it? A lot of people say, stop paying for it, take the cash value out now, and you can use that to go towards your student loans. You can use that to pay off collections. You can use that, don't go spend it, but use it to pay off some of these debts. And then that's going to get you to paying off debt a lot faster, which then will allow you to start investing money in the long term. But then I would suggest having a term life insurance policy because you do have a 9-year-old son. And then when it comes to your son, frankly, I don't think if it's a term life insurance policy, he doesn't need it because term life insurance is for when you have people depending on you for your income. And I'm assuming you're not dependent on him for his income. Neither is your pet, whatever it might be. So typically you don't need term life insurance policies for children. It's for when you are an income producing person in the household that someone's depending on you for livelihood. So I would be a fan of looking at that and saying, okay, this doesn't make sense to have. And again, I want you to be setting yourself up for financial success before you worry about setting your son up for success, because that's going to come back and bite you when you're 65 years old and you're like, hey, son, I don't have money for retirement. Can you help me out by giving me $500 a month? And that money could have been there if you stopped investing into his insurance policy and started paying off your debt, getting out of debt, and building your financial future first. And then guess what? Once you're debt free, you can start saving money for his college to help him out on that instance. But you need to get your situation under control before you can help others. So when it comes to investing, saving money, retirement accounts, insurance accounts for your children, those should come as far back after you take care of your current financial situation and future first. So,
Yeah.
Okay, so let's now go into these transactions then. So on this Citi card for this statement, we had a lot of money flow in and out because we had this $17,000 payment come in. But apart from that, if we just remove that one transaction, we had $7,610 flow out of your account in the month.
What was I spending it on?
Okay, so there is a transfer for $1,800 to your money market account in that.
That was probably portion of rent.
Oh, so you're thinking that's just rent in there?
That's all. That's still. I don't know what else I would have used $1,800 for.
Yeah, so I mean, if that is, I mean, you spent $7,610 last month. I see. I mean, most of these are debit card purchases. So I guess we'll go through it and see. We have. Looks like you bought summer camp for your son for $219 on December 4th. Is that for next summer? Already buying summer camp?
Oh, no. That's a monthly childcare expense.
Childcare. Okay. I just saw the name summer camp, so I was assuming that it was something for summer camp, but okay, that makes sense. That, again, I guess, childcare I don't see on your monthly budget that you sent over. So again, these are things that hopefully this exercise teaches you, okay, now you need to understand what your true finances are, because if you're paying $219, is that a month? Is that a week? A month? Okay, then that needs to be going in your budget too, and that means your monthly expenses are higher than we were expecting before too. We've got a transfer $425 to your money market account. We've got ordering stuff on Temu for $20. We've got Amazon for $60. Oh, here we go. We got the Northwest Mutual for $251.
There you go. That's the combined amount for both mine and my son.
On a monthly basis?
You got it.
Holy smokes. Okay. That's not cheap at all. $3,000 a year. And again, I would be like figuring out what is a term life insurance policy that you can get, but $250, it will not be $250 for your term life insurance policy.
Okay.
But when you did this $251 payment Northwest Mutual, it actually charged you $10 because you had insufficient funds in your account for that.
What, my Citibank charged me that?
Yes. So you're at $90 and then it automatically withdrew the $251. So you went negative $160 at that time, which then you got hit with a $10 fee, or I guess that's just transferring yourself. It got returned because you didn't have sufficient funds on that. And then you transferred more money in to be able to pay for it, it looks like.
Yeah.
Okay. Then we got YouTube TV.
Oh, I was going to say YouTube TV is like cable.
YouTube TV, honestly, is great, but again, $50.99, didn't see that in the budgets unless you're counting that as home utilities. So these are things, subscriptions, you got to realize how much you're paying for these and where are they going. So Amazon for $313.55 on December 8th. What is that?
Okay, first of all, Bailey, let's look at the time of year that we're doing these transactions. It's Christmas.
It is. What?
So that was a Christmas gift, but I returned it. So you didn't see the return credit, but that money went back into my account.
I see it on the 27th. It was returned.
Oh, okay. There you go.
Was it for your son or was it for someone else?
My son.
Your son, okay. But these are also things when it comes to that. Hey, every year there's going to be Christmas presents. So that means that you need to be allocating in the budget you sent over, you have $0 for shopping. And we're 2 days into this month or 3 days in this month, and we got a $60 transaction, we have a $300 transaction. So you have to make sure that you're budgeting appropriately for that. My wife and I just sat down and we set up our budget for this year. We're like, okay, we need to budget this much so we know that we have money set aside for the holidays, because majority of our gifts or shopping, yes, comes around the holidays for family members. I have a 1.5-year-old nephew that we bought them like 3 or 4 different things for Christmas because we want to. And so like, okay, we just need to make sure we had that money set aside. So when the holidays do come around, we have that in there and we're not going over it. So these are things, yes. And also spending within your means. And frankly, if I'm $175,000 in student loan debt, I wouldn't be going crazy on the holidays. So, because there's choices in life, and it's either the hard choice is don't spend much money, and I can promise you, your family, your friends will still love you if you don't get them presents, and that way you can allocate that money towards debt and start freeing yourself up from and allow you to spend more money on things you want. Or the hard thing of, hey, I'm going to spend as much money as possible on these gifts and not fix my financial future. So, I do see. Basically, after that, I see a $10 for Amazon. I see another $59 for Amazon. I see a $76 for Amazon.
Yeah, I basically own Amazon.
Do you have Amazon Prime, I'm assuming?
I do.
Do you want me to tell you the best thing you can do for yourself right now then?
Sign up for a business account with Amazon?
No, cancel your Amazon Prime account.
Why?
Don't sign up for it, cancel it.
Why?
Because it's causing you to spend money you don't have.
That's where I do my grocery shopping with Amazon Fresh. Bailey, I live on the 4th floor. I don't go grocery shopping. I have it delivered.
Again, there's added costs in there. Instead of going down to the grocery store yourself, you're paying $10, you're paying extra $5 or $10 in tips, fees, whatever it might be. It's not as convenient. You're going to have to go to the store to go shopping. But that also means it can be extra friction that you got to walk down 4 flights of stairs. You're going to have to walk a couple of blocks. You're going to think twice about, hey, I'm not going to order everything under the sun because I got to carry it back up those stairs. I got to carry it across town in the rain.
Things to think of.
Let's see what else we have. We've got, what is the Herald New York? Is that a restaurant?
Yes.
So same thing when it comes to, so your situation is very unique right now because you have $25,000 in your savings account. In theory, you have that money, but at the same time, it's not yours because you have $175,000 worth of debt. But when it comes to eating out, New York is an expensive place to eat out. Frankly, it's some of the best food in the world too. It's got phenomenal food. But eating out is so expensive that you need to be making choices too of, hey, I shouldn't be eating out as much because I need to be allocating instead of $500 a month to eating out, spend $200. Maybe that's one $50 meal every single weekend. So then you have an extra $200 or $300 a month that you can then go and use that to start paying down the student loan debt. I mean, if you have an extra $300 a month there, you have an extra $250 a month from your insurance. Obviously, if you get term life insurance, we'll budget $60 for that. I mean, it'll give you $400. It's basically $400 a month right there, $500 a month roughly, that will give to you to start paying down this debt faster. I mean, that's $6,000 a year if you have $500 a month more in cash flow from that. Is the food really that great when you know you have $175,000 worth of student loans that are going to be resuming that you're going to have to pay back? And that's just going to create a lot tighter of a budget and a lot tighter of a financial picture for you. So these are the things you're going to have to start thinking about and eliminating to be able to afford to do that. And to put yourself in a situation where you're 50 years old and you don't have any debt. It's not going to be easy to get there in the next 6 years. I can promise you that. It's a long road ahead for that much debt. But it's possible if you start making these small incremental changes that start freeing up a couple $100 a month here and there that you can start using to attack this debt. It looks like you went to Texas in December. Is that to see family?
I did, yes. That was like my Christmas time. It wasn't around Christmas, but that was for Christmas.
Let's see what else. I mean, there's a lot of small transactions on here. And it doesn't look like much. There's a lot of $20 transactions. I mean, there's a restaurant for $20. There's GNC for $26. I see 2 Oculus transactions for $20 and $30. There's another, it looks like, I don't know if there's a restaurant in New Jersey for $67. T-Mobile for $67. But these are a lot of things that are just small transactions, but they add up. When you got 30, 40, 50 of those in a month, they add up quickly. I mean, we got $7,600 worth of transactions last month. That's a lot of money, especially when you're only making $5,000 a month. It's just the math doesn't math there when you're spending $7,600, but you're only making $5,000. I mean, it's $2,600 that you could have had in your bank account if you're living below your means. And these are things you have to start thinking about. I mean, we got more eating out, $26. We got Postmates for $28. Food delivery, that's got to go. That is probably the worst thing to spend money on when you're in debt because it's so easy to order. It's, again, very convenient. But, I mean, you're paying $25, $30 for a $10 meal. After delivery fees, they jack up the prices on those platforms, tips, etc. Walk down the stairs and go pick it up. Worst case, best case is, hey, let's make sure we have enough food at the grocery store that we get that week so that when you're hungry, you can pop that meal in the microwave or in the oven or on the stove and be able to satisfy those desires. So, And then we have Canva for $255. What is that for?
Business cards.
Is this for like freelancing work on the side, or is this for your full-time job?
No, it's not for my full-time thing. I am an artist, and I sell some of my art. So these are business cards for my art stuff.
How the heck are you going to find all the business transactions amongst 5 or 6 different bank accounts and thousands of transactions?
I got you. And I set up a business banking account like this month, so I can start running those through that.
I would keep that fully separate. That allows you to understand, and you need to be running a P&L every single month on the business as well, so you understand how much money you're making, how much your expenses are, because you need to make sure that is cash flowing and profitable. You're setting aside money for taxes, not spending all that money, and just understand where your expenses are on that. But having it intermixed just causes a headache. So
yeah.
Again, more Postmates for $23. A couple other, it looks like restaurants, 3 or 4 days in a row. MetroCard for $5. We've got a day spa for $87.
Well, that would have been a treat to myself. Don't comment.
I feel like I have to comment now.
It's not a monthly thing, and it was Christmas to myself.
I could get behind, okay, let's set aside $10 a month so that every single December, Ash can go to the day spa and enjoy yourself. All for that. If you're sticking a budget and attacking this debt. If you're not attacking the debt and it's growing or it's staying stagnant, no, you shouldn't go treat yourself at a day spa when you got $175,000 of debt and you're not making any progress on it.
Okay.
We've got more Amazon, Uber, Duke's Deli. I mean, there's a lot of eating out. This is more than $500 a month eating out. I can promise you that right now. I mean, it's always like 5 transactions in a row, and they're all $30, $38, $50, $71, $81. Back to Bob's Your Uncle. Is that a restaurant?
It's a bar that's like below where I live. But thank goodness, Bailey, I actually don't drink. I drink like non-alcoholic beer, which is still like a fee, obviously, still comparable to a regular beer. But I don't have a big bar tab. Hopefully that's true in all those transactions you see.
Well, good. Well, I was gonna say I listened to a podcast, Money with Katie, this past week, and she was talking about alcohol consumption. And I want to say in New York, it's like the average New Yorker spends like $150,000 over the course of their life on alcohol or something crazy. It's like $300 to $400 a month on alcohol alone. It doesn't look like much when you look at these transactions. There are multiple of the Northwestern Mutual Fund retry payments. It looks like there's 2 or 3 of those because I think it failed 2 or 3 times, it looks like. So I don't think you spent actually $7,600. It was probably more like $6,500, which is still not good. It's still more than you're making. So these are reasons why you need to budget, because you won't know. If I asked you at the beginning of the show, how much money did you spend on this card in December? I can promise you wouldn't have told me $6,500, because you look at these statements, it doesn't look like much. It's because it's however many pages of 7, 8 pages of transactions, of transfers in and out, that you won't know that. And they're all $30, $40, $50, $60 transactions. They don't look like much. But that's what happens when you don't budget. You don't know where your money's going, how much money you're actually spending on things. And just, it doesn't allow you to start building a plan to get out of the situation you're in. So the next card I have is the Charles Schwab checking account. This one started with $3,500 in it. You withdrew $4,000 and you deposited $500. So you ended with $4.99 in this. So it looks like you're transferring stuff to your own. But then, oh goodness, we've got Postmates for $40. We got coffee for $5. We got a wine and a liquor store for $12. We've got another wine and liquor store for $30. We've got an animal hospital for $300. We've got more Postmates for $31. We've got another eat-out restaurant, the Cavaliers, it looks like. We have more Postmates for $60. We've got Drizzly. I don't know what Drizzly is. Alcohol delivery. I don't drink.
I don't. I don't. It wasn't for me.
Okay, so we're buying things that aren't for you.
I know, right? Terrible. And then what's the number? 175,000 in debt. I know it by heart now.
These are things that need to change, because, I mean, do you know how much money you spent on this card? I mean, I guess I said you spent $4,000 on this card last month, or on this account. And it's little things like these restaurants, like the Postmates, Ubers, delis, wine bars. What is GoDaddy for $1,000?
Oh, it's business.
What did you buy for $1,000 from GoDaddy?
Marketing services for my for my art website.
Again, these are choices right now. It's like definitely if you have a business, need a website, all that stuff, but spending $1,000 on marketing, if there's not like a direct quantifiable ROI on that, that's something that I wouldn't suggest spending that money on right now when you have all these other things going on. We've got AT&T bill for $100. Why did I saw a T-Mobile bill, I think a Spectrum bill, and now we have AT&T.
What would oh, I know. That would have been a payment for a neighbor that they needed me to make for them, but they gave me the cash for it. So it's like I paid it online, but they gave me the cash for it. My services are only Spectrum and AT&T.
Okay. I was confused why there's a third one in there. Okay.
Yeah, that would be confusing, yeah.
And then I see you have your bank account for your business. It looks like you just opened up. Not any transactions on that. And then we've got SoFi, which there's a few. There's a hair boutique for $104. We've got Xbox for $25, Xbox for $5, more Xbox for $25.
I hope my son can hear this.
What is the Sterling Group?
That's rent. Yeah, how much is that?
1,000?
Yeah, I contributed 1,000 that time. Rent is 2,000, so.
Okay, and then I see other stuff. I see one Amazon for $68. But yeah, I mean, most of your transactions are on the Citi card. I don't have access to that credit card, so I'm assuming there's probably more transactions on that too. But between the Schwab account, between your Citi card, I mean, we spent at least $9,000. It's hard to tell because there's a lot of different transfers in and out that kind of double count some stuff. But we had $7,600. Remove 1,000 of that roughly. We've got 4,000 on this other one, so 10,500. Then there's at least 1,000 in transfers on this one. So you're probably sitting around $9,000, 9,000 and 10,000. Again, I don't have the exact number because I'd put you in that ballpark, which is when you're making $5,000 a month is not a sustainable number at all. Some of these are not Christmas. Obviously, the GoDaddy, insurance, some of the other things that we didn't even talk about in your budget. And there's always going to be those one-time expenses that you're like, oh, these are one-time expenses. But I can promise you this summer, if you want to go somewhere with your son, or your son wants to go to a camp, or you want something for your business, there's always going to be those one-time expenses that you don't account for. So that's why when you're budgeting, you need to understand like, okay, maybe on average, I only spend $100 a month on shopping, but I do know that every single year, every single summer, I'm going to spend $300 on shoes for 2 new pairs of running shoes that are just once a year. And then maybe in the fall, $100 on an outfit for whatever event. And it's like, okay, $1,200 plus an extra $300 plus an extra $100 plus probably another extra $100 to $200 for buffer. And then you kind of annualize that on the average. Like you have to account for those types of things. Like my wife and I, for a clothing budget, we know that we're going to have new running shoes in the summer. We know we're going to probably do that once or maybe even twice a year, so that we budget for that. We know we're going to have weddings to go to that we might need new outfits or clothes for. So we bake that in, even though in January you might only spend $10 on clothes or $50 on new socks and underwear for the year. But I do know that in July, hey, I'm going to spend $400 on new running shoes for me, new running shoes for my wife, and maybe some new athletic gear. So those things you have to start baking into your budget and just make sure that you set yourself up for success versus, hey, when you're budgeting, don't just put $50 because that's what you're going to spend this month. Just make sure you're looking at it on a holistic yearly average. But yeah, I mean, right now, looking at your expenses, my current suggestions for you, I mean, right now, you gave yourself a 7.5 at the beginning of the show. I told you it's probably more like a 2. I would keep you at a 2 because we have that $25,000. If you didn't have that, I'd probably put you at a 1. But I mean, number one, you need to be budgeted, because without a budget, you can't expect to get out of debt. You can't expect to live below your means, because those transactions don't look like much, but when they add up, it's a lot. So budgeting is the first thing you need to do. Number 2, that credit card that you use, put it in a container, fill it with water, and put it in the freezer. Make it impossible for you to swipe that card, because that is going to allow you to spend money you don't have. That's going to allow you to spend money on Amazon. That's going to allow you to spend money on gifts, whatever it is. And a lot of people are like, oh, don't cancel the credit card because it's going to hurt your credit score. Frankly, right now with stuff in collections, I can't imagine credit score is great. So I won't even worry about that aspect of it. And then simplify your accounts. Like I said, you've got 5, like your friend told you in the past. Like I'm telling you now, you have 5 different accounts. And that makes it a 6 if you count the credit card. That makes it so complicated to understand how much money you're spending. You need to have one account for your checking where money's coming in and out. You need to have one money for savings. That's your emergency fund or whatever else on top of it. All money flows in and out of that, so you can understand where all your money's going. You can hook that up to whatever budgeting platform or tool that you're using, and it makes it a lot easier to see, okay, this month I brought in $5,000 and $4,000 went out. or $5,000 went out. It gives you an overview a lot quicker with that. But right now, I mean, between all these different transfers in and out, between all these different accounts, I can't tell what's happening here, and I can't imagine you can either. So simplifying that. And then after that, what you need to start doing is educating yourself about a few things. One, debt collection. You need to figure out what can you do about that? Who owns that debt? Is it possible to contact them to figure out, hey, will you do this for pennies on the dollar? Obviously, you have to be very careful for scams, for people that don't actually own it or people that call you about it. We need to figure out who owns that. What can you do to get someone to agree to pay you to pay 50 cents on the dollar on it, 40 cents, whatever it might be? Because I would want that wiped away. I don't want people to come and garnish your wages years from now. I don't want people calling you and you having to go to sleep at night thinking, hey, I still owe these people $17,000. That just doesn't sound good. We want to figure out how do we get rid of this debt as quickly as possible. Educate yourself about insurance, the whole life insurance policy, the term life insurance policy with your son, with yourself. With your son, like I said, I personally would not have insurance for children because you're not dependent on their income. I would have insurance for you so that in an instance something that happened to you, he will have the ability to live, whoever's his guardian, to go to college, to live, and for his expenses to be paid for. So I'd be looking at that and not ensuring that you aren't paying high commission-based products like whole life insurance policy, but you're getting yourself a good term life insurance policy, and I'll send you a bunch of resources on that. But that's something you really need to look into because that's $250 a month that is coming out. And if you get that down to $50, you can get that down to $60 for that term insurance policy for yourself. Hey, that opens up $190 a month. So over $2,000 a year that can be using to paying down this student loan debt a lot faster. And then really educating yourself lastly on debt payoff. I mean, right now we have the collections debt and we have the student loan debt. And debt collections, you have the money in your bank account right now to pay that off, which will just get rid of that because that's money you owe people. Then we'd have $8,000 left over in your bank account. And a lot of people, I mean, there's a couple different routes when it comes to debt payoff. Dave Ramsey, if you've ever heard of him, suggests keeping $1,000 in an emergency fund and nothing over that. Other people say, hey, keep 1 month or 2 months of expenses in your emergency fund, which given you have a son, given that you're in New York and you're kind of doing some temp jobs, maybe I would just keep that $8,000 in an emergency fund that you literally cannot touch and will not touch. I'm not opposed to that. If you're going to touch it, then you might as well use it to pay off debt. But if you can actually hold yourself to never touching that money in a separate high yield savings account that you literally won't touch unless you don't have a car. So like you can have tires go out, but whether it's a medical emergency or something that true emergency, I'm okay with you having a month or 2 months of expenses in an account as long as you're not touching it. If you're touching it, it makes sense just to use it to pay off the student loans now. So you literally cannot spend that money. So if you don't trust yourself without spending it, then it makes sense just to do it. But I'd be separating that out, keeping $1,000 or less in your checking account after rent's paid so that you feel like you're living paycheck to paycheck because we have all this debt. And you don't have money that, hey, I'm going to go spend this money on Amazon. I'm going to go spend this money and shop. And you kind of feel pressure from that. So you can start making some changes towards this debt. And you can start then building out your plan for paying off this debt. We'd have debt collections taken care of in this situation. And then it's going to be, okay, listing out all your student loan debts, because I'm sure it's a bunch of small different loans, from the smallest to largest, looking at the total balance of those, looking at the interest rate of those, and then figure out what is the best way to attack those. And there's a couple different ways to pay off debt, the debt snowball method and the avalanche method. Are you familiar with either of those?
I'm familiar with the snowball. I don't know what the avalanche.
I'm a big fan of the snowball method. That's honestly the best one to do because it's very psychological. Money is a psychology game. I mean, it's a little bit of knowledge, but a lot of it is just psychological and emotions. So why not use psychological methods to get out of debt? And debt snowball, you pay the list of debts from smallest to largest, and you attack the smallest one first, move up, and you start seeing progress that way. You say, oh, I paid off one student loan, paid off a second student loan, paid off the third, however many is in that total balance, and you start getting momentum and start getting excited and start like, okay, I can truly do this. And you start seeing progress on that. So that I would be building out your plan for that and understanding, okay, how much money do you have left over every single month to start paying these down? I wouldn't wait until these numbers resume with your provider. I'll be figuring out how can I start paying. If for some reason they still are carrying zero interest on it right now, hey, how can you pay those down now where there's not carrying interest right now? That would be only to your benefit. But I would assume right now, I mean, those companies want their money. I would assume it might have your payment as zero, but it might be still accruing interest. I don't know. That's something you really need to look into and see. But either way, those student loans aren't going away. Obviously, New York is an expensive place, but how can you create more margin by going and finding a job that is paying you $100,000 a year again? I mean, that would open up another $1,000, $1,500 a month in income that could be going towards these student loans. How can you get your business as lean and profitable as quickly as possible selling art and making sure that you're not doing $1,000 GoDaddy things or buying X, Y, and Z. You're keeping the expenses to the bare bones unless food, eating out shouldn't be spending $500 a month. We spent way more than $500 last month. Spend $100, spend $200 max. And that extra money go towards paying off this debt. It's not going to be an easy road, frankly, for the next 5 years. I think you can do it in the next 5 years. If you get your income up, if you get your expenses down and you stick to a budget, it's not going to be easy, but I can promise you that you will feel a billion times better 5 years from now when you're 49. Before your 50th birthday would be my goal of being debt free so that you don't have to go to sleep at night knowing that, hey, I have all this debt that is just taking my paycheck every single month. But I can promise you when you do that, hey, guess what? When you turn 50, debt free, you're going to start investing in retirement accounts. So you can start educating yourself about Roth IRAs, about 401ks, about investment vehicles, taxable brokerage accounts, what index funds are. But then even the best part is, okay, say you have $2,500 a month that you're paying towards debt. And when you turn 50, obviously you're going to be behind in terms of retirement plans, but maybe you'll put $2,000 of that towards retirement accounts and then $500 of that towards eating out, towards shopping, towards things you enjoy in life.
It sounds hard, like you said, but it sounds really great too.
Yeah, it's definitely not easy at all, but it's possible. I mean, there's people out there that have paid off. I mean, I know a couple people that have paid off $100,000 worth of debt over the last couple of years. They've people I've known growing up, and they've posted their journey on Facebook, and it's really cool to see people do that. If you watch the Dave Ramsey show, they have teachers, nurses, everyone else in between, single mothers. They have couples that do it. I mean, all sorts of different types of people that are different occupations, and they all go through the same process. You're not alone in the debt going to try to be debt-free journey. I mean, there's millions and millions of Americans that are trying to go that exact same path. So you can do it. It's just a matter of being disciplined, having a plan, and sticking to that plan. If you're 50 years old and you can start investing $2,000 of those dollars towards an investment account, so $24,000 a year, do you know how much you would have by the time you're 70? Give me a guess. You contribute $480,000, but guess how much it would be in 20 years?
I don't know. Compounding interest. I don't know.
So assuming a 7% rate of return, it'd be $983,000. So it'd be an extra $500,000 in your investment account. You'd have $1 million when you're 70 years old. And yes, people will say, oh, $1 million 20 years from now isn't worth $1 million today. But guess what? One, having $1 million beats not having $1 million at that time. And two, I'm using a 7% rate of return versus a 10%, which the S&P 500 has, or 10 to 12% over the last 10 to 20 years. So I'm doing 7% to account for 3 to 4% inflation, so that this buying power would be the same thing. If we use a 10% rate of return, then I mean it'd be like $1.4 million. So I'm trying to be conservative on that side with a 7% rate of return. But again, people will say, hey, that's not worth $1 million, isn't worth anything 20 years from now. The only person that's going to change your financial future, it's not the government. It's not your son. I mean, your son's 9 years old. He can be your motivation to why you're doing it, but he's not going to be able to say, take mom's bank accounts and credit cards and everything like that. You have to make that change and decision for yourself to start impacting your future, impacting his future. And the coolest thing is you can take him along that journey as well. I mean, we talked about he's spending money. You're letting him spend money on Oculus, on Xbox, but you can start teaching him about budgeting. Hey, you have $50 a month towards these toys. And I mean, on there with Oculus and Xbox, there's probably $100, $120. But you can teach them, hey, you have $50 towards it. I'm not going to tell you what you can't spend that $50 on. What I can tell you is if you don't have the money in your budget section, then you can't afford it. And you can start instilling those things. Obviously, he might not be happy about that. But those are kind of some ways that you can kind of show him, hey, give him $50 at the beginning of each month. When he wants something from Oculus or from whatever, he's got to hand mom that $20 or $21, whatever it is. And you're going to take that money. And when he says, hey, mom, I want to buy this, you say, hey, okay, you got to pay me for it. And you got to teach him some of those lessons along the way.
Right.
Awesome. Well, Ashley, what advice would you give to someone in a similar situation as you?
Oh, God. I mean, I would tell them to focus on the 175,000 student loans immediately and work on, the collections as well. Work on, not to look at the cash that's in your account as if it's as if that you own it. You owe someone else with that money.
Definitely agree with that, and have to start doing that.
All right. Well, thank you so much, Bailey. I really appreciate you.